want you to breathe me. Let me be your air. Let me roam your body freely. No inhibition, no fear. How deep is your love? Is it like the ocean? What devotion are you? How deep is your love? Is it like Nirvana? Hit me harder again. How deep is your love? How deep is your love? How deep is your love? Is it like the ocean? Pull me closer again.
Woo! Welcome back. MicroStrategy True North episode. What episode is this? 11. Episode 11. Welcome back, everybody. We made it. How deep is your love for Bitcoin, MicroStrategy? I feel like quite a few people are getting tested here these days. We've got a few red days in a row, and you know what? Surprisingly, equities and commodities aren't number go up every single day. Wow. That's a surprise. So it's a great time to be on this call. We've got some really great stuff to cover today. We've got a huge agenda. I feel like we could talk about this stuff for quite a while. So I'm excited to get into it and see where we go. So quick background for those that may be new here. What is MicroStrategy True North? MicroStrategy True North is a group of people that have gotten together. These are people that have been in the MicroStrategy trade for a very long time. They have very material positions in MicroStrategy, and they're at the front edge. They're on the knife's edge of what's going on in this trade. So this is a group of people that we've put together, and the design and structure of this meeting and this group, MicroStrategy True North, was meant to be it is meant to be an investment club. So this is like our investment club meetings that we're having. We were going to have these calls anyway. We just thought we might as well broadcast them to the community so everybody can hear what we're talking about, because I think that's really valuable for the community, and it's helpful to understand what's going on, because there are so many nuances to this trade. Understanding, corporate finance, understanding how debt works, understanding equity markets, architecture of all of these markets. And yeah, it's very complicated. And we've put a lot of energy and research, and we're putting a lot of energy and research out into the Twitter sphere, or the X sphere. And we're happy to share it and discuss it and go through those things. So if you don't like what we say, I don't really care. And this might be a great time to pass it over to Tim and give us our not financial advice memo.
Thanks, Jeff. What you hear tonight, it may be amazing. It may actually shock you that we're bullish, that we're excited, that we're looking through what's actually going on in the analysis. But it's not financial advice. I was on the phone with Grain as he was driving to his house. He thought he was going to be 20 minutes late, but he's on time. It's unbelievable. And he said, "Tim, I'm bullish. I'm so excited." I said, "Yeah, me too. I'm buying the dip." Marathon just bought $166 million of Bitcoin tonight as it's dipping. So there's nothing to not be excited about. Adrian's got his red light on because it's a red day, but that just means buy. If you're in this for an hour or a day, this might not be the group for you. So it's not financial advice, but we're really excited to be here. And pass it back over to you, Jeff.
Well, thank God Grain's got fast cars, so he could make it here on time, right? That must be the trick.
20 minutes late, I'm hauling ass. So I got to make
That's
it.
That's right.
Absolutely. And Tim, you make a good point, right? There's this community and group on X. It's called Irresponsibly Long, right? I've got Irresponsibly Long in my title on my X page. And, irresponsibly long, to me, what that means to me, being long a stock means I'm long, holding it for the long term. Irresponsibly long to me means I'm holding it forever, longer than anybody probably thinks that I should hold on to this thing, and in size and scale. So I take a very similar mantra to how I hold Bitcoin for this stock, in terms of, if I'm thinking about it for, holding it 4 years plus, right? So this is something that I view as a long-term hold. So to me, that's what irresponsibly long means. So it may mean different things to other people, and most of the chatter that we've seen in the X community these days has been very short-term thinking and not zooming out and taking a broad perspective of what's going on. So just thinking about the equity price, for example, just to start, right? I mean, today closed at $349, the equity price. If you were to zoom out, right? 6 months ago, the equity price closed at $146. So within 6 months, the stock price has more than doubled. If you've held it for 6 months, that's a great return relative to any other equity in the market. That is the fabulous return in that time horizon. So there's always this opportunity cost of capital, and people can always think about other places to be parking their capital. And there's a lot of things going on. So everybody has FOMO all over the place, and if you get bothered by this stuff, or by Saylor using the ATM, and you're worried about your stock gains, then this might not be the place for you. And I think that's okay. So I've muted more people this week than I have ever muted before, and I feel pretty good.
Oh my God, yes.
So on the agenda tonight, we are going to go through catalyst and stats like we do every week. We're going to talk about current events, what's going on, current events. We're going to talk about the $42 billion capital plan a little bit, talk about financial leverage, FASB fair value accounting, might do a little bit of bear watch, throw some bears up on the screen, and we'll see where we go from there. So without further ado, I will share my screen and pop over to the catalyst. How do I do this? Where am I at? I always get this wrong. There it is. Bingo. Okay. So we're going to pop over to the catalysts and statistics. So irresponsibly long members, as of today, we're at 23,000 irresponsibly long members. The MSTR Den, which is a Discord group, if you haven't heard of it, we're at 3,978 members in the Discord group. I believe there's also some different chats within the Discord group. So you can go look at, there's just a basic MSTR chat for like equity holders. There's an options chat that's really interesting and very active. There is, I think, like an OG investor chat. I think there's private. You got to get into it. So there are many ways to connect with people and talk about MicroStrategy and get alpha and data and information. And those are a couple of the locations where some of this data and information kind of rises to the top. So check it out. Getting into catalysts, and just because of the catalyst doesn't necessarily mean it's positive, right? We've got a December Fed meeting today, 25 basis point drop, and it resulted in the entire stock market puking. I think that's because there was a bit of a hawkish tone on equities, and there's could be so many things going on behind the scenes, like algos trading. There's so many things that come into play when thinking about how interest rates impact the market, and how the Fed, the communication of those interest rates and their perspectives looking forward impact the rest of the market. So, it is a catalyst. In this case, it was a negative catalyst, and at some point we do expect it to kind of turn back around. And we can talk through that. I think that's an interesting one. QQQ inclusion and reconstitution. As we had this big celebratory call on Friday, we had 100,000 people on the call where we talked about QQQ inclusion. MSTR is included in QQQ, which is a phenomenal outcome that effectively means that we've got Bitcoin is now included within QQQ. QQQ reconstitution is effective on December 23rd. So it has December 20th here. It's effective at the in market close on December 20th. And it is effective on Monday, December 23rd. So on Monday, all of the funds that follow the QQQ need to have positions in MicroStrategy relative to their weight within the index. Does that mean that there will be a potential, gap up? We have no idea where the stock is going. We have no idea, how much of the stock has been front run. We have no idea, how much trading is happening behind the scenes. There's significant increase in volume on the stock over the last couple of months. And yeah, I mean, who knows where it goes from here? Ultimately, the concept of MicroStrategy getting included in the QQQ is very bullish long term, because this is a constant bid. So when investors are investing money in QQQ, that's a constant bid on all of the equities that are included in the QQQ index. So that can result in future cash flow and future buyers of the stock at any price in the moving forward and into the future. I'd put out there potential price targets of, multiples can range on, the price of the market cap going up anywhere from like 30x to 175x, depending on, how your view on capital coming into the market. And, depending on your perspective of timing and when it was front run and when it happens, that may or may not come into play. So we'll see how it goes. No bets on the stock moving in any one direction. I wouldn't necessarily purchase or buy. Again, none of this is financial advice. I'm not thinking about purchasing options that expire next Friday or anything like that. Moving into the future, we've got Christmas and New Year's, January 17th, 2025, historic options expiration. I've got a little bit more work to do on this. We're going to review the status update on this option expiration, because the stock has moved significantly in the last 6 months. There are significantly more options in January that are now in the money, and that may be an interesting date to keep an eye out for the investors that hold those stock options that are in the money, and how they exercise them, if they exercise them in plans to hold them into the future. We've got the presidential inauguration. A lot of noise about this. Strategic Bitcoin Reserve potentially coming into play very quickly after presidential inauguration. So keep an eye on that. Another January Fed meeting, which we can expect maybe another potential rate cut. FTX estimated $16 billion in repayments sent to customers. Q4 2024 10K earnings report happening in February. So we're going to get an update on the capital plan at some point in February. We've got MSCI quarterly review. This is where, another market cap weighted index ETF that's, revising the relative weights in the index. So that will be changing. So a lot of things are happening, and you could go to this website here called mstrmoon.com, and you can review these catalysts. And you can take a peek on what's on the horizon. So this catalyst list is the reason we're all here. And it's a huge list of catalysts and potential bullish events that may happen in 2025 that are relative to Bitcoin, relative to MicroStrategy, and are bullish for this equity holding into the long term. Anybody got anything else to add there?
Do you want me to hit on the fact that for fiscal years beginning after this past Sunday, FASB is now mandatory?
Absolutely. Yeah.
So kind of interesting. I pulled up Saylor's tweet from, and I just retweeted if anybody wants to look, December 13th of last year. The thing has 1.9 million views on it on X. It might be one of the highest viewed tweets that he's ever put out. And he just says FASB has officially adopted, now obviously this is December of last year, FASB has officially adopted fair value accounting for Bitcoin for fiscal years beginning after December 15th, 2024. This upgrade to accounting standards will facilitate the adoption of Bitcoin as a treasury reserve asset by corporations worldwide. And not surprisingly, Adam Back is the, at least on my feed, the first comment that appears, and he just says, this is great news for corporations to have the fair value of their Bitcoin treasury represented in their accounts. So, yeah.
No, I mean, it's a huge event, right? This is an enormous event, and we could talk about some of the calculus. We could get into a little bit of the calculus a little bit later. But this effectively is allowing all companies to actually capture the gain in net income on their income statements when they release earnings. And currently, right, if you look at this is a huge event, right? If you look at MicroStrategy's earnings going back for the last 4 years since they adopted the Bitcoin treasury strategy, almost all of their earnings are negative because they've had to mark down the Bitcoin to intangible asset value at the lowest period during the quarter. And I mean, this is such a massive deal because effectively they haven't gotten they haven't earned the gain on their balance sheet. So for example, when I go tell people about MicroStrategy stock, they will go on the internet and they'll look at earnings and they'll see that all of the earnings are negative. And immediately they're like, nope, I'm not touching this with a 10-foot pole. I'm not into it. I don't want to do it. And they don't ask any other questions. They don't think about why is it negative? Is there a reason that it's negative? Like, what's going on? I thought they have all this Bitcoin. Like, how's this work? And so really, there's no reason for anybody to dig any deeper. Now, all of a sudden, you've got this gun going off at the starting block where in Q1 2025, when MicroStrategy adopts FASB fair value accounting, and you see this potentially massive number of net income hitting the bottom line of the balance sheet, larger net income value than they've ever had in their corporate history, that's going to sound some positive alarm bells, and people are going to start looking into this. And I think this is one of those like nominal bias type events where, similar to Bitcoin passing $100,000, where more people are going to start looking into Bitcoin. This is one of those things where like, oh my God, like more people are going to start looking into MicroStrategy. So that's my opinion and thesis. Yeah, I mean, it's huge. And that's effective. That was effective on the 15th. So if you have a fiscal year starting after December 15th, then you've got to do it.
And just repeat that, because there was some confusion in the group in Irresponsibly Long about December 15th. They're like, oh, they're starting in Q4. Like, no, that's calendar year, but the fiscal year, they're going to finish out with the old and they're going to start FASB Q1 2025, right? So we can just get that on the record. Okay, cool. Thanks.
Yep. Q1 2025. That's when I expect MicroStrategy to announce their first quarterly report with FASB fair value accounting. That's correct.
And real quick, I don't know if Ben or Jeff or Adrian, Grain have anything to add, but like, I would think most small businesses, their calendar year, their fiscal year, they elect to go January 1 to December 31st. And like, I've met professionals and especially attorneys, right? And they'll have 4 different entities, and they'll start like the one entity, the fiscal years starts Q1, and the second one starts Q2, and then Q3 and Q4. So you can do all these intricate things tax wise, but most people, correct me if you know a lot of people otherwise, it goes, January 1st through the end of the year. That's their fiscal year. So that's where there might be some confusion that if your fiscal year starts for some reason December 15th or through December 31st, then you're mandatory. But for for most people and most businesses, you're going to look at January 1st.
Yep. Brilliant. Good share. Thanks, Tim. Okay, one other thing I did want to show is just this MSTR tracker, just giving us an update of where we are, because a lot of people don't have the MNAV has come up a lot, and I think this is an interesting thing to look at. I personally don't think MNAV matters at all. Like, I don't think it matters at all. Like zero, it matters zero to me. I don't care about it as long as the equity itself, the market cap of the company is trading at greater than 1. Like that's all that I care about. But I don't care about like if this number is fluctuating, goes up or down. Not how I look at the stock. I think more likely at some point in the future, 3, 6, 12 months from now, PE, the price to earnings, is likely going to be a bigger thing that people are more interested in, or at least like the larger traditional finance market might be more interested in. But just want to put this into perspective, right? So I guess even at, there's been a bunch of noise and people frustrated with the MNAV. MNAV is not a KPI. Michael Saylor doesn't give a shit about MNAV. Like zero. This is not a financial KPI. He's not trying to maximize MNAV. There's zero care about MNAV. Like the KPI is as much Bitcoin on balance sheet as possible. So if you think that Michael Saylor cares about, maximizing this MNAV going to, 10 or 15, that's just not a thing. That's just not how this works. Additionally, I wanted to point out just where we're at today. We're about a 2x MNAV. We're roughly higher than 60%. It's probably more like 70% of all of the MNAV data points throughout the entire year, right? And anybody, when we got to 2 MNAV in March earlier this year, people were freaking out on the positive end, saying like, "Oh, this is way overvalued." And now it's the complete opposite. It's down to 2 and everybody says it's way undervalued. So it's just like, put this stuff into perspective, right? Like many of the people that have been in this stock and this equity holding for a really long time, guess what? We actually had doldrum days, down when the stock was trading about 1x MNAV, when everybody and their mother thought buying IBIT was better than MicroStrategy. And we were fighting those people, right? Like, so if you're frustrated that the MNAV's at 2, I don't really care. We've been through this fight at 1.
It's funny how fondly we look back on those days now, right?
Oh my God.
Those were the days you could buy it. You knew it was cheap. It was great.
Yeah, I don't know what 2 and 3 and 4 and 5 mean, but I know what 1 means to me. It means invent a new word that's bigger than irresponsibly long.
Yeah.
That's
sell kidneys.
Exactly.
Start looking for bodily parts that you can sell and offload in exchange for shares. So yeah, just wanted to point that out. Like, Cole Tenold makes fun of me. He's like, every time Jeff zoom out is an indicator for where the stock is going. So ultimately, zoom out here, take a break and look at, where the relative stock is.
I've also seen people doing technical analysis on these charts now, which I think is hilarious, where they're going, we broke through support. We broke through MNAV support.
MNAV support.
Like, if we're doing TA on these charts, then,
the crazy part is
people are struggling out there, man. They'll look for anything.
I think it was more funny than anything else when I saw it. And I'm like, broke support on MNAV. Is that a thing now?
Yeah.
Here we are. Yeah, I guess so.
Hey, Jeff, can you bring in the simple moving average for MNAV on this chart? Just kidding.
The 30-day, the 50-day, the
Ikimoku cloud look like on this one.
We hit a golden cross on the MNAV today. We're going higher. The crazy part, Ben, is like there are algorithms that people are definitely building on this for sure. I mean, I think Invest Answers is all about this. I think he's looking at this as like, okay, I could go back and forth in between Bitcoin and MicroStrategy relative to some of these indicators. So, it's just,
to be honest,
possible.
You probably can, right?
Yeah.
We can't pretend that's not a thing in this strategy, right? I've been having the discussion, and it's part of the reason why if I look super tired, it's probably because I spend too much time late on the internet, dispelling these types of things. So I should probably knock that off. But the KPI is Bitcoin yield, right? That's what he's watching. So it's Bitcoin per share and the increase in the Bitcoin per share. That's the target for MicroStrategy. MNAV is going to expand and contract, right? It's just a calculation at a point in time, right? It's going to expand, it's going to contract, and that's going to be a function of what phase they're in, right? Right now, he's in mass accumulation phase. So he's using the ATM. All the price action is not associated with the ATM. So and I don't know if we're talking about that later, if you want me to talk about the ATM now, but when you see like a dump in the stock at the end of the day, that's not MicroStrategy market selling shares. That's not how ATMs work, right? ATMs are very controlled instruments, and they're going to be set up. They have predefined rules for how they can execute them, and it typically fluctuates based on how much volume's trading on the stock that day. And what they do is these firms that are hired, right, like the Cantor Fitzgeralds of the world or some of these other investment banks that are executing these sales, they've got an algorithm that's basically doing what's called a TWAP, right? A time-weighted average price, which basically just means they've got X dollars that they're trying to sell. and they're going to sell it over a Y period of time, right? So it might be that they're trying to raise $2 billion and they're going to do it over the week. So they're going to TWAP sell it. So they're going to sell it very slowly throughout that entire week until they've sold the entire amount. The intent of ATM selling is not to move the market, right? So they try to be, and you heard Saylor talk about it in the video, they try to be invisible to the market. Now, none of us are naive enough to think that having additional sell pressure in the market, right? I always refer to this as inorganic sell pressure because it's not just market dynamics at play, right? It's inorganic sell pressure. I'm not naive enough to believe that doesn't flatten price action for a little bit, right? That's still significant selling pressure entering the market that wouldn't have been there otherwise.
Yeah.
But it's not like what people think, where they see the price go up and they go, well, it's going to dive now because they're going to hit the ATM. That's not a thing, right? They can't trade like that because that would be looked at as manipulating the price of the stock. They can't do that. So they have to use very predefined arrangements. Same thing with when they buy Bitcoin. Saylor's not market buying Bitcoin, right? The same thing that they're going to do. They've got a defined period of time. They have to deploy X amount of capital. They're going to split that capital up into small chunks. And the algorithm will allow for, if the volume is higher during certain periods, then they'll be able to buy more Bitcoin during that period. But if it's lower, then they'll slow it down, right? So it scales based on volume the same way as the ATM does. So don't fall into the narrative that the stock dumps because Saylor hit the ATM and everyone's going, there it is, right? Well, it's not how it works. So we need to, hopefully people are getting up to speed on that, right?
They're
And
not.
I think it was good that Saylor explicitly explained that on this call, because I think there was just so much bad information, like they were being, opportunistic, market sellers, and they're just dumping, 1 million shares into the market or something. And they would find themselves in a courtroom for a very long time if that's how they were executing those trades.
Yeah, I think I needed to hear that
Thank
too,
you.
because if you see the price go down, I just have to remind myself, my Bitcoin per share is going up. It's going up, but it's not their selling pressure. It's I think everybody's first instinct is, oh, he's at the ATM. The price went down $10. He's at the ATM.
Yeah.
And then, so
people need a reason to explain it to themselves, right? They're looking for some reason to explain it. But you're right. I mean, during this period, while he's using the ATM, he's taking that capital, he's buying Bitcoin, it's increasing your Bitcoin per share, right? And the reason that that's important when you think about the expansion and the contraction of the multiple to NAV, right? Because that's the other metric people look at. You've now got a higher base starting point of value behind your shares. So when that next NAV expansion cycle happens, when he's off the ATM, he's no longer in accumulation phase, he's issued the convertible debt. Now you're just kind of in the waiting period where they're not putting any inorganic selling, either through the shorting that comes from the new convertible bonds or from the ATM. Now that NAV expands, but it's expanding from a higher starting point, right? So now the expansion's more dramatic. So just look at this period in time like you're building a higher base for your shares, right? He's putting more value behind your shares, and that increased value now creates a larger impact on the next expansion cycle in the NAV when he's out of the market. So it doesn't bother me at all when I see this stuff because I know what the strategy is, right? I know what he's looking to do. He's very clear about what he's going to do. So you just have to go through that rationally in your mind and go, okay, we just had a peak. I mean, if you looked at that chart, that was a pretty significant peak, right? That's an expansion phase. And now we're contracting because he's in accumulation mode again. He's trying to get more Bitcoin. That Bitcoin just itself moving to the balance sheet raises the fair market value on the balance sheet, which compresses the MNAV because you're looking at market price versus book price. The book price got higher, the share price stayed flat, MNAV gets smaller, right? It's just a calculation. So people take it as gospel, but it's a point in time calculation.
Yeah.
So
and the
I
more
wanted to
Not
chime in on.
commandments.
Yeah, I wanted to chime in on this. So for the folks that were on MSTR True North last Wednesday, after Adrian did his great explanation of
Quantum
qubits, right? After that, Dan Hillary went, he's not on tonight, and he put up a chart, and on the chart it showed that since the Q3 report, that their accumulation of Bitcoin per share is 9x the previous accumulation phases. That was the chart that he put up, and I had actually mentioned that. And so when you look at that, exactly what Ben just said is that that's the accretive part where when the price action, just sheer logic, if there's more Bitcoin per share, and when he stops the ATM and when the sentiment changes for whatever reason, we're in the sentiment right now, I think that the price moves up. It moves in both directions faster because there's more Bitcoin per share. And that's where he keeps on going back to is volatility, is vitality. But it has, in the end, it has more Bitcoin per share. So then they're, how should I say it, capitalize better on more Bitcoin. So I think that this is all goodness. And the 10-minute video that was done from Bloomberg Television, I posted it today. I actually received it. Tim had sent me the Bloomberg article, and then somebody had said about the Bloomberg 10-minute clip. You should watch that clip, and if you don't understand it, watch it 2 or 3 times. And he will talk about everything that validated exactly everything that Ben said about the TWAP. And that's where we are. And what he said was he does not try to change the price of, he wants to be able to acquire the Bitcoin without altering the price. So we have known all this stuff for a really long time, and the new people, obviously, it may be new to them.
Well, yes, and Ben did the perfect explanation that I've been trying to do all day today, because the comments have just been kind of, people have been panicking about the ATM repeatedly, and like Ben and I were on Monday with Anders talking about this, and I refer to it as coiling of the spring. That's basically what's happening here. People need to chill, and I think a lot of the new entrants in the market are very, very loud because they probably bought above 500. And they're panicking right now because I think that there's a lot of people getting into options and without knowing what they're doing. There are a lot of individuals that are buying without taking into account the downside, and the noise is getting louder and louder and louder on some of these topics that we've already talked about ad nauseum. So I think we just have to kind of cycle through and do like another education cycle or something to get people more calm.
You've also got to recognize that they say that they're focused on long-term value creation for stockholders, right? That
Yeah,
doesn't
let's get
mean
into
we're
that.
focused on creating short-term opportunity for traders, right? That's not in the vision that they put out there. So the trading aspect of this, like, yeah, if you're playing short-term, it's going to hurt, but you got to look back and go, well, how are we going to look at whether this is successful or not, right, as a strategy? Well, obviously, we're going to look at MicroStrategy over the long term versus Bitcoin over the long term. And if they consistently outperform, it's been a successful strategy. And the shareholders are really going to look at that and go, well, what was our stock performance, right? It's that basic. Well, over the last year, we've had what? I mean, it's going to be lower now, but as of yesterday, we were up 458% or something on the year, and we were up 230% over the last 90 days. Like, as a shareholder, you can't really ask for much more than that, right? Like, you basically got a decade of returns, well, like 2 decades of returns on any normal stock in 90 days, right? Like, that's a crazy return. So you can't just turn on a dime here, right? If you're an investor, this is a long-term play for you. You start to digest what the strategy is. You focus on what the long-term implications of this strategy is. And once you get to the point where you're comfortable with that, you understand what's happening during this cycle we're in, which is still only like 21 days, right? It's very short period of time that we're in. And quite frankly, people might love that this happened, because if he does what he says, which I've always said, just take him at his word, because he's not, lied to us yet. Yes, he used things faster, but that's market condition based. He might use up this ATM, and if they're just focusing on the 21 billion debt side next, that might mean we might not see an ATM for a while.
Yeah.
Right?
Yeah, you can't get mad at somebody when they tell you what they're going to do and then they do it.
But people always do get mad at you when you do that, though. That's the thing. So,
Right. I want to chime back in what Ben said. If you folks go to Google Finance and you type in MSTR in Google Finance and you click on year to date, and year to date is very interesting because obviously we're in December. So it starts in January 1st. So year to date, MicroStrategy is up 410%. But if you click the 1 year chart on the top of that, it's up 511% in 1 year. And the only difference between those two is 2 weeks. So I just think that these metrics are, and then in 6 months it's up 137%. So when you look at the numbers, when in doubt, zoom out. That's what you say to people, and we go through these tips. This is what battle hardens you, gives you conviction and fortitude. And if this is concerning for you, go watch 20 hours of videos of Michael Saylor. Watch him directly, and that will probably make you feel better about what's going on than reading a whole bunch of comments on on the internet. And that's why we started. Let me be clear. That's why Jeff started MSTR True North. So when are we going to get into the really bullish part?
Yeah. So I want to hit a couple more things, which is also bullish, but people are worried about this timeline thing and like, oh, where did this come from? Like, look back, there were definitely breadcrumbs that this thing was going to go fast to shit. If you go look at the ATM that happened in August, there was a $2 billion ATM that was filed. I think it was August 1st. And then, come September, it was a month. $1.1 billion of the ATM was used within a month. Okay. So that is on 30% of the volume, the average volume that we have today. So that is a really good indicator. That was a really good indicator of how fast this thing was going to be used. Right? They used 1.1 billion of the ATM incredibly quickly when they filed for it in August, and that was probably an indicator to them of the 21-21 plan of like, hey, how long that might this take? Additionally, right? Let's think about this like timing wise. So October 30th was when the 21-21 plan, the $42 billion capital plan, was announced. October 30th, 5 days before the election, when it was still uncertain on who was going to potentially win the election as well. So, if the election were to have gone the other way, this strategy may have been completely different. It is a $42 billion capital plan. And yeah, maybe the ATM would have been used over, a year and a half, and the convertible debt side of it maybe used over another year and a half. But the equity market rocketed for most equities, and there was a ton of volume going into all equities, Bitcoin equities, and that was a great opportunity to capture some of this additional volume that was coming into these types of equities. Additionally, Saylor in the video today mentioned leverage, which is something that Ben and I and this team have been talking about frequently, about how the Bitcoin that they're adding on their balance sheet now. So all of the Bitcoin that they've added on the balance sheet in Q4, maybe I'll share my screen. So the Bitcoin that they've added on the balance sheet in Q4, right? So they started Q4 with 252,000 Bitcoin. They're right now at 439,000 Bitcoin. So the Bitcoin is almost doubled in Q4. And you look at the leverage ratio, so liability to asset ratio. The leverage ratio at the end of Q3 was about 30%, and it's now down to 16.3%. So what this means to me, and Saylor even mentioned it today, is that the leverage that they have on their balance sheet is becoming less and less. So it's giving more opportunity to put more debt on the balance sheet. So, in zooming out and thinking about this capital plan, it makes sense that this was the plan most of the way, is to use the ATM first, because it effectively clears balance sheet space and capacity to grow and put more debt onto your balance sheet, right? You can't put $21 billion of debt on your balance sheet if you only have $21 billion of equity. Like you need the equity value to be significantly higher so you don't get over leveraged. And so all of the, this is going to end poorly bears come out of the woodworks and say this is over leveraged, right? Like this is very strategic, and it's by design. And in looking at, managing any corporation based on a leverage ratio, I would say that MicroStrategy in this instance is under leveraged, and they have capacity to offer better debt. Now, again, zooming out, thinking about where we are in the macro environment, the Fed just dropped interest rates by another 25 basis points. The cost of capital got cheaper today. Let me say that again. The cost of capital got cheaper today. So it makes sense that we waited Saylor and the MicroStrategy team waited until this moment to offer convertible debt at some point in the future, because the costs of capital has gone down. That means that the terms of the future convertible debt that they can offer have improved, which is good for all shareholders. And if you know this stuff is on the horizon, it makes sense to strategize around it and potentially game it. Yeah, I think that's it. And you know
Well,
what?
can you look at the Bitcoin held? So they more than doubled it in a year. And doesn't every single sat that they stack just make it that much easier to get the EPS that they need for S&P and 500
Yes,
inclusion?
there's so many there's so many things. I mean, absolutely. Well, if you think about it, actually, I brought that up. I've got the data here. I wanted to walk through that with people because I thought that would be helpful. So over here on the right hand side, this is MicroStrategy quarterly net income. So in order to qualify for the S&P 500, you need to have positive net income summed together over the last 4 quarters. Positive net income summed together over the last 4 quarters. So if you look at the last 4 quarters of MicroStrategy's, or the last 3 quarters of MicroStrategy stock, the net income is -3, 4, about -$500 million. Okay. Now, if you go look at how much Bitcoin they own, so if you take $500 million, 500 E6 divided by how much Bitcoin that is, the price of Bitcoin needs to move $1,139 in Q1 from January 1st to March 31st. In Q1, the price of Bitcoin only needs to move $1,139 to erase all of the negative net income on the balance sheet for the last 3 quarters, which is pretty mind blowing, right? I mean, if we see like a $10,000 increase in Bitcoin price in Q1, all of a sudden, MicroStrategy is posting a $4.3 billion. If the price of Bitcoin goes up $10,000, MicroStrategy is posting a $4.3 billion gain in Q1. So there's also more incentive to put as much Bitcoin on your balance sheet before the end of the year, before you adopt FASB, fair value accounting, because it leverages that earnings per share jolt once you do adopt the fair value accounting rules. Great point. It's crazy. Anything else? Should we talk about that 10-minute video today? Maybe I'll look at the comments.
I think the 10-minute video is one of the most important things to talk about.
Yeah. So one of the biggest takeaways I had from that 10-minute video was the mention of the $42 billion capital plan. Not how do you say it? It was once we're done with this capital plan, we will create a new capital plan, something along the lines of that. And I think that was great to hear, because that effectively tells you once the ATM is done, they're going to issue all of the convertible debt before they go back to the drawing board and issue another, $420 billion capital plan, or, whatever the future capital plan may be, or $84 billion capital plan, whatever the capital plan may be. So if you look at it, I think the remaining ATM balance at the end of today, and maybe I'll just pull my screen back up. The remaining ATM balance at the end of Monday, so we don't know how much was used this week. Again, there's so much asymmetric information here, so you don't know exactly how much the ATM was used. You just know how much Bitcoin was purchased. The remaining ATM as of end of Monday was 7.7 billion. So of the 21 billion, 13.2 billion had been used. So, we're getting close to the end, maybe a few more weeks of using the ATM before, there's not much left.
I just got to say something. Look,
Jump in there.
yeah, so we knew that before they did the third quarter announcement, people ask me, well, what's he going to say? I'm like, he's going to say something big. And if you go back to the MSTR True North call, there's a clip of me talking about 42 billion. I didn't know it was going to be that big, and it was, and it was shocking. And then they said it would do it over 3 years, but basically each month equal to a year, and he did it that fast. And then what you heard by listening to his call, they did not know how fast they were going to be able to do it. And what happened, I believe you said from the time of that earnings call to the election was 5 days. And so what he said on the call was once the Republicans basically took Congress and the presidency, then he made the comments that you just made, that he has very enthusiastic investors in order to go with the next plan. And I think what happened is, and then think about it also, now he had triple Q inclusion after today's the video that he did today, which probably recorded yesterday. So think about it, folks. He's talked about a $42 billion plan. It was going to be done in 3 years. He will do it probably in less than 3 or 4 months. So each month is equal to a year. He did the ATMs. He's hit the limit on the number of shares. Jesse had broke that information the night before. Saylor had said, hey, we're going to have to do it probably at the shareholder meeting. They could do something in 60 days, but by that point you wouldn't do it. 60 days short term, because then it's just 30 days later you actually have the regular shareholder meeting. So there's no incentive for them to force that through to get the additional ATM, because they did 3 years in 3 months. So this is where it gets super bullish. They came out with a $42 billion plan that was super bullish. We all saw that. We didn't like shocking. Then he does it that fast. The Republicans take the presidency and Congress. He also talked about SAB, Staff Accounting Bulletin 121. That one was had bipartisan approval in Congress, the Senate's and the U.S. Representative, but Biden vetoed it. But now Biden is gone, so now they could refloat the same bill, get SAB, Staff Accounting Bulletin 121, gets reapproved, and very quickly, let's say in January, and then you go through all the catalysts that we just talked about. Triple Q inclusion, ATM no longer, they have to keep shares left of the converts that they didn't do. So Jesse, props to him. He figured this all out. Saylor validated all these points. He talked about another Fit 21 or something. There's another bill. And so I can't think of any more bullish catalysts. And given the short-term pricing, is it a bummer? Absolutely. But the reality is, can you folks wait 30 days? Can you wait 45 days to see how this unfolds and to see where it goes? And I think it's going to be a much, much higher price. And for every given price action going forward, because there's more Bitcoin per share by sheer logic, given that if Bitcoin hits an all-time high again, there's no ATMs, the price volatility will be higher. It'll be higher to the upside and higher to the downside. Did I miss anything, Ben? Did I misspeak?
No, I don't think so.
Okay, this is yeah.
Let me give a couple of points here
Sure.
based on things that I've been seeing a lot of, right? A lot of people are having the conversation saying MNAV's all that matters. And the question I would have for you is this. What is the magic formula that only allows MNAV to go up forever? How would you justify it, right? So the problem you run into is you need some type of strategy that justifies a higher premium on the stock. That strategy is the fact that the value underpinning every share that you hold is growing all the time, right? That's why Bitcoin per share is important. That underlying value that underpins each share. And yes, there's no direct claim to Bitcoin. Let's not pretend there is, right? We all know that. But it's the value that puts behind each share that's increasing over time without you doing anything, right? That's a part of them leveraging the capital markets, capturing that arbitrage, putting value behind your shares, so that when the market sees the yield that's coming to each of these shares, they go, well, this is actually a strategy that's accreting value to the shareholders. And we're seeing a long runway where they can continue to do this. That's something you can place future value on, is that continued growth of the value going into each share. So it's not like if they just stop buying Bitcoin, that your NAV just expands forever, right? That's not real. You have to continue to show this type of progress so that you justify those expansion periods, and you can start to really speak to the value that your shares gain over time, right? That's a very important component to this. Another one that I've been seeing that I just want to talk about is there's been some videos on YouTube going around that people have sent me a lot, where people are calling the leverage reckless and dangerous. So 2 things. One, these have been some of the least informed videos that I've ever seen, because one of the basic things people are missing is when you just look at the financials, people seem to miss that the value of the Bitcoin on the balance sheet is not the market value of the Bitcoin at that time, right? It's the marked down value of the Bitcoin. So they're looking at it right now going, well, if you look at the total liabilities and divide it by the shareholder equity on the balance sheet, they've got way more debt than they have equity. Well, that's not real. They're missing, if you just look at the Q3, that shareholder equity should actually have been $9.1 billion higher, which means their leverage ratio is 0.35. For reference, Coca-Cola is 1.53. That's 430% higher than MicroStrategy's leverage ratio. So that's just not true, right? I know that it sounds great in sound clips, and MicroStrategy's become the engagement farming central of the world right now. So everyone's putting out a video to tell you, about this impending doom and gloom blow up. But the leverage ratio is 0.35. That is very, very low. And I've also heard people modeling, well, if they add 21 billion, then that leverage ratio goes up to like 10. And you go, no, it doesn't, because that debt comes with a corresponding asset at the exact same time. So debt goes to the balance sheet, they buy Bitcoin, Bitcoin goes to the balance sheet. Yeah. So when you see those things and you see people talking about dangerous leverage and all these things, it's just uninformed. They haven't spent the time to understand what's going on here. So if you hear that, don't get shaken, because it's not real, right? These are people that are getting sound bites, that are getting clips, getting views, but they don't understand what they're talking about. They haven't looked at it. They don't understand the accounting behind this right now. So just take a deep breath, calm down, right? Everything's good. This is a very low leverage ratio, right? Look at any other company that you can find. This is incredibly low leverage. So it's anything but reckless. So I'll stop my soapbox right there.
So
I've been getting a lot of that.
Right. So look, folks, today I was busy taking care of other things. And so when it's a down market, I just go take care of what I have to take care of, and I just don't look at it, because I have the conviction and fortitude. And the reason why I have that is because I understand the metrics from there. But I want you to think about how a serious investor thinks, and what Michael Saylor said. They probably laid out, when he did the $42 billion capital raise, he already has investors that have loaned him billions of dollars to do the converts. The converts, what is it? 4 out of the 6 are eligible to convert. So they're way ahead of schedule. And probably what they said to him, this is the way that I would do it. If I was an institutional investor, I'd be like, hey, look, Michael, this is the way it's going to work. Your $42 billion plan, that's great. Do it over 3 years. If the Republicans take it, you get triple Q inclusion, right? And Bitcoin takes an all-time high, and any one of those are like, wow. And then obviously you're going to have to do FASB. If you do that, we'll give you 10x next year on the next capital raise. And so just make the math simple. I'm going to make the prediction that he's able to get $240 billion after this is fixed. After this capital raising's done, the $240 billion will be $10 a month, $10 billion per month for 2 years. And he will build out that ladder and do that because these have been so successful. And he will figure out whether it's zero coupon, and he will do that. And so I think that if he did 3 years and 3 months, the next one, this one's 42 billion, the next one's 420 billion. And it'll be over 2 or 3 years, not financial advice. But he did this so fast. So the appetite, the enthusiasm is the word he used, is there. It doesn't take that hard to think that he could do 10 billion a month, right? Or or do 10 billion, he'll break it up in 5 billion converts, and he'll break it and he'll do it every 2 weeks. And that's because he did this amount of money that fast.
Yeah, I mean, if they get included in the S&P 500, you're talking about 3 of the largest index ETFs in the world that are buying the stock with a constant bid on the stock, forever.
I bet they already said to him, if you get S&P 500 inclusion and you put it out in July for your Q2 earnings, do a $500 billion. That's 42 billion times 10. 420 billion, you just round it up. It's a half a trillion, and just make that the number. And then are people impressed enough? We were all impressed with 42 billion. But if he does this and think about it, if he gets the S&P 500, the FASB fair value accounting, then I'm all good. So then in July, print it. I said it's a 10x number for the 42 billion. And that's what I think. And the next thing I want to say is, look, if the stock price, and Adrian said this before the call, so if the stock price right now, I don't know, closed at 348, but that's after the 10 for 1 split. Really, the stock price for everybody that bought a year ago is actually at $3,480,
Yeah.
right? Right. So let's be realistic. If we did it the 10 for 1 split, the stock would be at $3,480. But if the stock now is at 348, and let's say it goes to 1,000 or 1,500 in February, which I don't think is out of line, he'll do another 10 for 1 split. There'll be a bunch of people on this call be like, well, I had a 10 for 1 split, and then it did a 10 for 1 split again. So I got a 20 for 1 split. No, you got a 100 for 1 split. You got a 100 for 1 split because it's 10 for 1 and then 10 for 1 again. And so that's the crazy part about this. And I'll be like, how did this happen? And I'll be like, so that's the way I see this unfolding. I have to go get some ice cream and dessert right now. But look, you guys are awesome. I don't know how you can't be any more bullish based upon all the metrics that we saw. Year to date, 410%, 1 year return,
Oh my God.
511%. I don't. Oh, the price is down for the past couple days.
Yeah.
Okay,
We're at a price we
don't-
haven't seen in 21 days. Like
we have a price we haven't
21
seen in
days ago.
21 days, right? And whatever would you say? 55 days ago, he came out with this plan for 42 billion, and
Yeah.
he's almost done with half the plan that was supposed to take 3 years.
Yeah.
I
That's
did I
bullish.
miss-
That's
Well,
not
it's bullish.
bearish.
Ben,
That is
tell me,
bullish.
right? Ben, what did I miss? Did I get anything wrong? Please correct me in front of how many people are on the call?
I got 13,000.
I don't know. But
13,000 people. Ben, did I say anything except for my prediction? Was anything I said incorrect? Factually
Nope.
incorrect.
nope, I think
No?
you got it.
Okay,
Go
guys.
get your ice cream.
I'm getting my ice cream. You folks have a great time. I think everything is goodness. Next Wednesday, we probably won't. We may or may not have the call, right?
That's Christmas.
That's Christmas, right? We won't have it,
No,
right?
this is the last one of 2024, unless we have like an impromptu one from something crazy happening. But,
Okay. So I
yeah.
wish everybody happy holidays and whatever you celebrate. Take care of your family first, then your friends, and enjoy. And have a great time, folks. Take care.
Cool. Thanks, Grain. We'll see you. Yeah. One thing that Grain hit on there is I've noticed that most of the bewilderment kind of comes down to two buckets, right? You've got like you've got the TradFi people that think MicroStrategy is a Ponzi, and you've got the Bitcoin people that think MicroStrategy is a Ponzi. And it's funny because they have this like they have fundamental differences, that they have different reasons they think they're a Ponzi, right? So like the traditional finance world doesn't understand, they know leverage and they know finance, but they don't understand how Bitcoin works. And it's funny because like on the other side of the coin, like all the Bitcoiners that think that MicroStrategy is a Ponzi, they know how Bitcoin works, but they don't understand how finance and leverage work. And those two groups of people are like continuously converging to understanding both, right? Like the Bitcoiners eventually are going to start understanding like how the traditional financial world and how leverage works. And the TradFi people are eventually going to have to learn how Bitcoin works and learn that like an internet native currency is here to stay forever. So it's a really interesting conundrum. And people that hold MicroStrategy are this like very small portion of people that understand how like the traditional financial world works and how leverage works and how running a financial company works. And they also understand how Bitcoin works, and Bitcoin being an asset and collateral with the ability to post that collateral as an asset to generate future yield. Another concept I think is really valuable to share with people, right? So if you think about Saylor using the ATM, right? So using the ATM adds this base Bitcoin to your balance sheet, right? It's a base asset that's sitting there that it's not necessarily getting you excess volatility on Bitcoin. Right. It's because the stock is being sold and it's being purchasing Bitcoin and it's sitting on the balance sheet. So that, we're going to call that like base asset, base Bitcoin. Now, for every convertible debt that's issued, the piece of convertible debt is a structured Bitcoin product. So it's reducing the volatility of Bitcoin, right? You're chopping off, you're truncating the downside. You're truncating the downside, but you're also truncating the upside because there's a premium that the bondholders have. So they have to hit the premium. And so the past premium was 55%. And then there's also a time horizon on the piece of debt that they hold. So any excess volatility that the bondholder is not willing to take on in excess of the excess return and the excess downside, all of that volatility, that excess volatility, is delivered to shareholders, and that is in the form of excess Bitcoin. So I think it's a good way to think about this is like this excess component where a lot of the like future yield comes from, taking on the volatility that the convertible debt holders don't want to take on. I think it's an interesting way to think about it. So what do we got now? We've got 17 billion used in 50 days, which is incredibly bullish. Again, people apparently think that's bearish. Like stocks are traded at the margin. So, if this is a thinly traded equity and there's not many shares that are actually trading at the margin, like volume's really high. So there might be a lot of trading back and forth between, similar entities that are trading against each other, but there might not actually be a ton of shares actually trading at the margin of people that are going long and short. So, when things happen in the market, the entire market pukes, there's a sell-off in the market, and that may impact certain equities more than others. And Ben, you made a really good point earlier on, anytime you see the stock drop quickly during a day or go up quickly during the day, it's like that sailor using the ATM. Look at other equities at the same time. Like often moves in the market are correlated with other equities at the same time. So like for me on my stock chart, when I'm looking at stocks, I have like MicroStrategy. Then I also throw all of the mining companies right below it, all of the mining equities right below it. So I view MicroStrategy, I look at IBIT, and then I look at all of the mining companies. And I can see like the charts in one screen, and I could see how they're all changing throughout the day. And it's really easy to see, it's funny. You'll go on and people will be like, oh, that's sailor using the ATM. And you just like see the stock drop, like huge drop. And it's like, you zoom out and you look at all the other equities. All of the other equities puked at the same time. And it's like, okay, well, that's not a single actor, selling a bunch of shares to, generate cash flow.
He's not selling the miners and IBIT too?
Yeah, I know.
That's infinite money glitch right there.
You just start shorting other stocks to generate income, and you go long MicroStrategy. That'd be savage. Oh my God. So yeah, I mean, not much else to say, really. What else you got? Anybody else have anything else?
Well, I'll toss this out. What do you guys think about his comments about preferred stock? What do you think that looks like?
Ooh, preferred stock. Josh Mandel is going to get all up in this. Josh would be very interested in the preferred stock. So wouldn't it issue a dividend? Is that the thought? Like a preferred stock issuing a dividend, like a different like risk return metric? How would it be priced? I mean, there's a lot of questions there.
See, I actually think it looks very similar to the convertible debt model, right? I don't think we'll really be all that surprised when it comes out because I think it's going to be convertible preferred debt or preferred equity. And so you get a very similar structure. I think the structure to a lot of people will be fairly familiar just based on everything we've seen with the convertible bonds, where you're going to have a conversion price of that preferred stock into common stock. You get some different terminology like coupon is now dividend, right? So you get some of those changes in it. But I think when we see it, there's been a lot of speculation on what that means, but I think it's just going to be another way of raising capital through using the equity as the payment method, right? So I think it's going to be convertible preferred stock, if anything. And I think that you're going to see very similar premiums for the conversion price. I don't think it's going to feel actually all that different. I think it's just a new a new avenue of basically collecting convertible capital.
Yeah, interesting. So would it be like a Class B, like a is it just a different like would it be tradable in the equity market as under a different class, or is that kind of what you're thinking?
I would guess it probably will be.
Yeah.
But it comes with certain triggers, right? Same way that we have like the 130% conversion trigger, right? I'm guessing it'll have certain triggers in there where MicroStrategy can force it to convert into common stock and get rid of the preferred stock, get rid of the dividend, right? I think it's going to be very, very familiar, but it's just going to be in a different wrapper than the convertible bonds are, which probably offers it up to a different set of customers, right? Which is probably the point.
Right. Yeah. The whole point of this is just tapping different pools of capital. And, you know, we were chatting about this offline. You can even structure the convertible debt with what was it? Like a negative premium. What were we talking about? That was interesting. It was, instead of having, we'll have to flesh that one out a little bit more, but
negative coupons.
It wasn't a negative coupon. No, it was the conversion. Instead of having a conversion premium of 55%, having a conversion premium of par, and not having to, and the debt, you don't pay back as much as you got. Basically, so let's say it's a $1 billion convertible debt. The debt obligation may then be at the end of the period 900 million. But par, the strike price might be, you know, par with the stock. But basically, you get $1 billion to buy Bitcoin, and you only have to pay back 900 million. But it's also convertible into equity. So, like, these are all like pricing components, and they may be interesting to different pools of capital and for different reasons. And I mean that market is creative. That market is super creative, and people look at things very differently. I mean, I'm coming from a very creative world in traditional finance where, like, if I can dream it, I can design it, I can create it, I could sell it to the market. It's a trust-based market with very little regulation. And so I could see those similar type components. But Adrian, you said you're going to drop any final thoughts you want to share with the people?
Yeah, higher. Look, the number's going to go up. So people need to ignore, well, let me be specific here. I understand the level of stress that the price action could bring in for people, but the narrative spreading your fear doesn't help anything, right? So if you are unsure of something, please don't hop on Twitter and just send out your thoughts and get 1,000 other people running down the same rabbit hole, right? Whether it's ATM conversation, whether it's the MNAV conversation, whatever it is, you're better off just posting a question in a form of a tweet and asking than spreading narratives. I think we are a pretty good source of information. I get more easily annoyed than most because my DMs are flooded on most days. So I just say exactly what I'm thinking when I'm thinking it. That's just how I work. But I think that we are in store for a very, very good Q1 in 2025. I think that everyone should do their best to weather the storm. We saw worse this summer. I mean, really.
This is a storm? Yeah, or the summer, or like, oh my God, February. February was like, oh my God, Fred Krueger's like MicroStrategy's dead, you know, and you're like, oh my God, like, what, people are listening to this guy?
Yeah.
Like, that's
so
what we're up against.
We had February. We had the summer doldrums where we dropped down to, what was it, 1175?
Yeah.
So, or 175 now, whatever. This is fine. So I think everyone will be all right. We just need to just chill. It's fine.
This doesn't even feel like this doesn't feel like a storm to me.
Well, not to me. I bought more. Yeah. I was supposed to be done by this point.
That's, you know, like if people are freaked out because you bought at 500, like this is and you had conviction then. This is a godsend to, you know, change and lower cost basis, unless you're like full YOLO'd at $500 and there's no helping you. Can't help you.
Well, and then you know what's going to happen? You know what's going to happen? It's going to run up to like 1,000, and then we're going to have the same people saying, "Oh, I kind of wanted to drop down so I can buy more."
Yeah.
There's no pleasing anyone
Yeah.
in this trade.
That's
So I
classic.
suggest everyone just make their money and enjoy it. Enjoy this ride that we're on, because we're going to look back in 5 years and say to ourselves, "Oh, holy shit! I was involved in one of the most asymmetric trades of all time. Twice. You got Bitcoin, and then you got MicroStrategy."
I was just going to say, I kind of hope it goes down a little more so I can buy more, but I won't say that, Adrian, because I don't want to get on your nerves here.
Well, no, you won't get on my nerves, because I know if you
You're
say
like,
it,
"Woo."
you mean it.
Yeah.
Like whenever I know when the price drops, Ben is just like, "Oh, well, if you're going to give me free cheaper shares, I'm going to take them." And that's how I feel about it too. But granted, our purview is a little bit different than most, so take this as an opportunity to buy more shares if you can, and if you
Not financial
can't,
advice.
yeah, and if you not financial advice, and if you can't, relax. And if you don't understand options, if you don't understand how the whole game works, stop fucking doing it. And the one bit of financial advice I will give: stay out of leverage trades if you don't know what you're doing, please. MSTU, MSTX, because the same people 2 weeks ago that were telling me, "Oh, I saw you on True North. I don't believe what you're saying is accurate," or "I saw your post. I don't think it's accurate," are same ones messaging me now saying I should have listened. So please, guys, we're all here trying to help. We're all going to make money. We don't have to be stupid about it. We don't have to overreact. Just ride it out. We're going to be fine.
Bingo. There it is.
So,
Higher.
peace. Higher. Exactly.
Higher. All right. Thanks,
Yeah,
Adrian. Thanks for joining.
Later.
Yeah, to Adrian's point, like when he said, if you don't know about options, just don't do it. I mean, that's absolutely the case. I've got people that will chime in on my streams or whatever, and at the end, I like to look at the chats, and people will be like, my such and such strike expires in 2 weeks or 30 days or 2 months. What do I do? And I'm like, if you have to ask anyone what you should do at any point in time during the life of an option, then you shouldn't have opened that trade to begin with. You know what you're going to do. You create your plan when you get the fill. When you click submit that you want to open this options trade, you have to know what you will do if it goes up, if it trades sideways, or if it goes down. And you got 180 days. You have to decide, okay, I'm going to make a decision at 90 days or 30 days or 60. And you have to know, are you just going to cut bait and take a loss? Are you going to take a certain kind of amount of gain? And if you don't have that plan at the beginning of the trade, you will make some stupid ass emotional decision in the middle of the trade. So if you're asking questions from other people about what to do with your option, then it's probably not one that you should have opened in the first place.
And here's the other thing, right? So much like Instagram and all these are people's life highlight reels, right? You're only seeing the good times. People aren't sharing their losing options trades with you. So when you see all these
share one.
people make, well, I was gonna say that's what's unique, right? Like a lot of people are constantly looking like for how much is grain down, right? And they want to use that as like a point to jab at him with. But he's one of the only people giving you that transparency to show you that, look, it can be really, really good and it can suck pretty bad some days.
Yep.
So when you're seeing all these people post winners, you can almost bet that there's way more losers.
Yeah.
And don't let them pull you into feeling like you need to chase the lottery win. Right. Bitcoin's been doing great on its own. You could stick with that. MicroStrategy's been doing great on its own. You could stick with that. Going 2x MicroStrategy or trying to go 10x MicroStrategy, right? It's just unnecessary because you got to do the risk reward in your head and go, if I take a total loss because I try to, time a trade with options and I lose all of that capital, now what return do I need on just my core holdings to get that back over time, right? And it can be really damaging to your long-term wealth creation goals. So, I always caution that you just got to filter everything you see online. everyone who's showing you how great of a trader they are, right? They're only going to show you the winners, right? They're not going to
Yeah.
come out and go, but here's one where I got wiped out for 100 grand, right? You're not going to see that one because that doesn't make them look good, particularly if
Right.
they've got something to sell you, right? That's a different thing. So
I was
take
thinking
it
about that
all,
too.
put it all through a filter, right? Like Neithu does all his stuff live every week, all the time. So he's had good weeks, he'd had bad weeks. I always joked with him that my favorite times to watch his stream are when things are really bad. And I'm wondering how he's going to scramble his way out of this one, right? I mean, it's fun, but you got to learn to go through that thought process so that it's almost instinctual how you're going to change your position if market conditions change on you, because options are really sensitive to changing market conditions. So just keep that in mind, right? Don't get baited in by thinking everyone's winning the lottery every week. Everyone's getting 10,000, 20,000% returns. That's not real, right? That's a very unique situation. Jeff got himself into one of those very unique situations. Some others have as well, but that's not the norm, right? Those are major, major outliers in trading. So just take that for what it's worth.
Yeah, one of my favorite quotes, there was a professional blackjack player who wrote a book, and my favorite quote from it was, "I'd rather get rich slowly than poor quickly." And it was about bet sizing. You know what I mean? Like if you've got a $600 bankroll, you don't go and lay down 50 a pop or 100 a pop because you'll be broke in 2 minutes. So, you might have to use the $5 chips, go to a $5 table if that's your bankroll. So it's a position sizing thing. Because if your portfolio goes down 50%, you can't just, if it goes up 50%, you're still down, right? You didn't go back up to where you were. If you lose 50% of your money, you have to gain 100% of your money now to get even Steven. So please, the number one most important thing to any trade is position sizing. If it keeps you up at night, it's too big.
Yep, totally.
Absolutely. Yeah. I mean, shit, I had a 0.05% bet on what was it? It ends on Friday. So it's December 25-10 calls on MicroStrategy. And I bought them right before the earnings call. I think I bought them on October 28th, like right before the earnings call. I was like, I feel like something good is going to happen here. And I'm still holding them. I should have sold them, when it peaked at $500, but like what do you do? So they were up more than 10x at one point, and I could have just pulled the trigger and let it go, but I decided to hold on to it because I wanted the time, like I wanted to wait on it, and they're going to expire worthless unless we go to 510 in 2 days. And at this point it's like, okay, I'm just going to let it expire worthless. I'll just hold it. But yeah, I mean, it happens. And but that was one of those like sizable, like size wise, it was one of those like trades that I was willing to take a speculation on. And now I have a lot more information about what's going on in the equity as well. So that was a loss. It's definitely a bummer, but at the end of the day, I still feel very comfortable because I wasn't over leveraged, and like I'm okay like letting that grind away. Did I lift weights extra hard because of it? I was like, fuck, I gotta 10x this trade, like yes, I did. I was like listening to hardcore like metal music and like some fucking Linkin Park and stuff, just like grinding it out. But you know what? That's the way it goes.
Yeah, I mean, that's exactly it, right? Everyone thinks that, when they're getting into these trades, like, well, if I get up 10x, I'm definitely selling. But then you get up 10x and you're like,
what if it's 20?
What if this is a 50x, right? And then the next thing you know, you're basically at zero and you don't even have a value to get out of it at. So,
yeah,
I mean, that's just a reality of options trading, guys. So it's why you never hear me suggesting it to people. Do I do it? Yeah, but I know what I'm in for. And it's very, very small compared to everything else that I'll do because, I'm a long-term view type of investor. I'm not trying to hit the home run every week. If I find the right opportunity, yeah, I'll press it a little bit, right? I'll increase my bet size if I think I've got the right risk reward on my side. But, the losses that pull you backwards are more painful than, gaining it slowly. So,
Yeah.
just figure out your emotional state when you're trading.
Yeah. Well,
Because everyone doesn't manage the emotions well, and trading can't be an emotional game or you're going to lose. It's just how it goes.
and it's funny, like people have asked like, well, where can I read literature on trading options? And I'm like, honestly, you kind of just have to do it. You kind of have to like learn some of the hard rules, unfortunately, about like emotion and mental management and bet sizing, relativities, and all of these things. Like my option strategy today in my trading career, think of it that way, is significantly different than it was when I started my options trading career. And that's because I've experienced different like things in the market happening at the same time. So yeah, I mean, yeah, it's kind of experience driven.
Totally.
Go ahead.
No. You can go ahead.
I was going to shift gears over to over back to my spreadsheet because I'm getting some shit about like apparently ditching MNAV. So I want to show my spreadsheet, which is updated. And to be very clear, I'm not necessarily ditching MNAV. I just don't think it's like the greatest indicator. Like we could see frenzy on MNAV. I'm still 100% bullish on like we could see frenzy in MNAV because no stock is priced on MNAV. The fact that people care about it and are focused on it is like kind of silly. But it is like an indicator of could be an indicator of frenzy. So
let me say one thing before you
ahead.
dive into that, because I've seen a lot of questions on it as well. People want us to talk about the blackout period.
Oh yeah, hit that. Let's start with that.
Yeah. So here's the thing with blackout periods. There's no defined period that we're going to know of, right? It's going to be based on their internal policies. And one of the things to know about blackout periods is it was really put in place to stop insiders from trading, right? So it kind of puts a freeze on insider transactions. But a lot of companies expand that out to their ATM usage, which is why people are looking at it for, when aren't they going to use the ATM? It's not a defined period, right? It's not a regulated period that they have to shut down. It's a discretionary period for each of the companies. So we don't know what that period is. We can take some guesses, right? Like usually the shortest period you're going to see is the 2 weeks leading into earnings. More traditional would be 4 weeks leading into earnings. But if there's a material announcement that's coming with earnings, then you're probably in a blackout period from the end of the prior quarter until those earnings. So it's a gray area at best, right? We try to make an educated guess on it and go, well, it's probably, at least 3 to 4 weeks, but we don't really know because it's all defined by their internal policies. And unfortunately for us, that's not shared with us. So we don't know what the blackout period is concretely. We just know what's kind of a standard practice in the market.
Yeah, absolutely. Yeah, nobody knows. Right? It's like we think there's going to be a blackout period probably in January. Nobody knows.
Oh, February, right?
What would be end of
year earnings.
Well, the end of year earnings would probably come out like February 10th, something like that.
Yeah, somewhere in there.
Yeah, so end of January, February, something like that. Shift gears. We cool? Can we talk about this the spreadsheet with the MNAV and looking at prices? Because multiple people asked like, "Hey, can you update this?" So I've updated it, and here we go. We've got Bitcoin owned, MicroStrategy Bitcoin owned, 439,000. Bitcoin price, I think this is up to date. Yes, 100,946. Bitcoin 100,946. MicroStrategy at 350. So the assets held on the balance sheet about $44 billion. The pre-Bitcoin assets, I just have this as a fixed number, 250 million. MicroStrategy's liability is about $7.5 billion. So your kind of net asset view, 37 billion. Publicly available traded float, 243 million. And if you the current trading multiple of net assets So the net asset value is around 2.3 based on this calculation. And this is what we got. So, you know, the Bitcoin price goes, so right now it's about 2.5. Bitcoin price is around $100,000, so about 376. So if we see NAV expansion, which I fully anticipate at some point in the future, you know, we've got continued compounding of these passive ETF investors that are buying the stock. The narrative will be developed over time. You know, once we have FASB fair value accounting, and we see earnings per share come through in 2025, then we will have more people that will have a longer term narrative on the stock, thinking about this stock relative to other stock and price to earnings ratios, things like that. So I wouldn't be surprised if we see MNAV continue to expand over time. If you look at a $150,000 Bitcoin price and a 4 times MNAV, 4x, going back to about what the peak was when the price hit about 500, that would get us to a price of $962, and thinking even further, you know, out to 1,444. It moves quickly as the NAV multiplier expands. It moves very quickly. The market cap moves very quickly. The price moves very quickly because you have this kind of compounded exponential impact on the equity. So with that, I mean, I haven't ditched this. I still look at this all the time. I have not ditched this at all. I just don't think like looking at NAV or trading on NAV really means too much. This could be at, you know, quote unquote irrational levels forever, right? Like it's currently trading at 2, and we think it could go much higher, and it could sustain that. Like we could get to 4, 5, 6. Like other companies, other growth companies have a price to book ratio, or, you know, a net asset value ratio in the 10, 15, 20, sometimes even higher, depending on, you know, their income, their revenue, their competitive, their moat, you know, competitive environment, all of those different things, their relative size and index ETFs, you know, how close they are to the money printer, by buying back shares, doing all these different quirky financial things. So at the end of the day, all equities are, you know, a representation of financial strength at some point into the future and forward looking into the future. Personally, for me, I think Bitcoin is the best asset in the entire world. It's the best collateral in the entire world. And I think that we're going to see a significant appreciation in the price of Bitcoin beyond the assets that other companies in trading in the entire equity market hold. So my underlying fundamental thesis has not changed at all. I mean, that's why I'm still here doing MicroStrategy True North, because like I'm irresponsibly long. I'm holding this thing forever. So yeah, that's it. I mean, if the price of Bitcoin goes to $1 million, right? Let's think about this. If everybody in the entire market thinks that the price of Bitcoin goes to $1 million at the same time, then MicroStrategy, and assume the multiple stays nearly the same, then the price of MicroStrategy goes to $4.4 or $4,400, which is about a $3 trillion market cap. Or no, that's about a $1 trillion market cap, to put it into perspective. So that's if the multiple doesn't expand, if there's not frenzy, if there's not a bunch of people, you know, coming into this trade. Again, want to put this into perspective. There's 15,000 people watching this. There are 23,000 people following Irresponsibly Long. With GameStop, when we saw frenzy and mania, GameStop traded at a 49 times multiple of net asset value, which was like irrational, right? Like we could say 49 times multiple for GameStop was irrational. The indicator that we saw was r/Wall Street Bets, where all of the alpha was for the entire GameStop trade, went from 600,000 people to 10 million people in a week. So we are not at mania. We are not at frenzy. Still, there's so many people that have no understanding of what's going on in this trade. They have no idea like how Bitcoin works. Like, what are Bitcoins, bro? Like, oh my God, it's tulip bulbs. Like, no, this is collateral. This is the best collateral on the planet, and people haven't figured that out. So I'm here for that asymmetric trade.
Can you talk a little bit about Allianz entering this? Maybe you talked about it on one of these that I wasn't on, but just from the insurance industry perspective, kind of what it means to an insurer to hold these types of bonds and why that's important for finding these different types of buyers that are going to be entering this space.
Yeah, I think that's incredibly important. So Allianz Allianz is a German insurance company. It's one of the largest insurance companies on the planet. It's the largest asset managing insurance company on the planet. So insurance companies hold all types of assets, right? Like the way insurance companies work, they take in premiums in the door to pay out liabilities at some point in the future. And this is why Warren Buffett loves insurance companies, because you have a float, right? You're getting dollars in the door to pay out liabilities in the future. And guess what? You get to hold that money in like until you have to pay out that liability, and you get to invest it. Okay. All insurance companies do this differently, right? Like they all have different investment groups and different investment channels, and they invest in different types of things depending on the duration of their liabilities, right? Like you've got life insurance. Life insurance has a very long duration, 30, 40 years. You've like even beyond that. You've got casualty business, which may have a duration of like 5 or 10 years. And maybe you have workers' compensation business, which may have a duration of 10, 20 years. And then you have property business. Like property business has a very short duration. Like if you lose your house, you know it's gone. Like the duration is very small. So depending on all of these different liabilities and the design and makeup of your liability portfolio, you want to match the duration of those liabilities with assets that you have into the future. So many of all these insurance companies will buy multiple different types of assets. So they'll hold cash to pay out, quick claims. They'll hold, equities and different types of bonds. Bonds will match the duration. So you could do duration matching with the bonds. You can hold the equities to, handle any potential inflation risk that you might have on your portfolio, or kind of to juice your gains. And all insurance companies, for the most part, unless they're incredibly highly capitalized, like Berkshire Hathaway, all insurance companies are also purchasing reinsurance to minimize the volatility on their balance sheet, so they can maximize the capital return that they have on the float. So, Ben, getting to your point of like why this was so big for Allianz, or I think it's a really big step for the industry buying MicroStrategy's convertible debt, because insurance companies are subject to regulatory bodies and rating agencies. The regulatory bodies and rating agencies they tell you how much capital you need to hold in your entity to pay for your future liabilities. There are like they're called capital adequacy ratios. Those capital adequacy ratios have certain thresholds. So like they'll give you certain credit for your assets. So like for cash is cash. So you get 100% credit for the cash that you hold on your balance sheet. Now, equity is volatile. So you may, there's a volatility charge for your equity. So you may only get 50% credit for holding equity on your balance sheet. And bonds are in between the two, right? Bonds have less risk. They're less volatile. And so you may get like 80% credit for the bond that you're holding on your balance sheet. And the challenge is right now that no insurance regulatory bodies or regulators or rating agencies give any credit for holding Bitcoin on your balance sheet. So if you were bullish Bitcoin, if you're an insurance company and you're like, I'm bullish Bitcoin, I want to hold Bitcoin. If you put it on your balance sheet, great. You just can't leverage against it. Like you're not going to get credit for it in the capital adequacy models. So that means you have to feel comfortable that like that asset itself is going to outperform or, improve your portfolio. Now, where this really unique component comes into play with MicroStrategy and the convertible debt, and any company offering like a Bitcoin backed bond or a Bitcoin piece of convertible debt, you do get credit for holding debt on your balance sheet. And that's where this is incredibly valuable for these pools of capital, these enormous pools of capital, right? Allianz has over $1 trillion of assets under management. I'll say that again. Allianz has over $1 trillion of assets under management. And that's just one insurance company. And they may see this way of, purchasing convertible debt as a way to get Bitcoin exposure while minimizing downside, but also getting some of the upside potential of Bitcoin on the balance sheet. And they may think of this bond, they may match the duration of this bond to some of the liabilities that they have in their portfolio. Like it all goes into this like blended capital charge on a balance sheet. So that's where I see a ton of opportunity in this space for the convertible debt market. I mean, who holds the debt in the entire world, right? Like, it's banks, insurance companies, corporations, and they're all managing treasuries for, like, or pension funds, right? Pension funds do. They're all managing treasuries for liabilities that they've got to pay out at some point in the future. So it's I'm incredibly bullish on the depth of this market. I think Allianz bought, like, I don't know, it was like 250 million or something. Maybe it was less than that. Maybe it was 100 million. 100 million part of 1.5 trillion. Like, it doesn't move the needle, but there's some significant capacity there, right? If it's a really successful convertible bond and they hold it and they absolutely crush it, they're going to sign up for the next one. they're back and signing up for the next one.
Well, I think what's interesting is that because these bonds are getting so much bigger now, that you might need to start tapping into some of those giant pools of capital. I mean, not that they're running out of pools of capital on Wall Street, but what these insurance companies give them is a different type of buyer for the bonds. So a company like an Allianz is going to fall into, I look at these in kind of two categories. You've got the ARB guys, right? The guys that are delta hedging. And then you've got the long only component of these bonds. And these insurance companies are going to fall into the latter. And what that means is that throughout the duration of the bond is the allocation that goes to those types of company doesn't come with offsetting short selling pressure, right? So they're not going to have the same type of an impact on share price to the downside during the pricing. Now, maybe at maturity or when they convert the bonds, maybe they aren't going to hold the equity. So maybe you do get some sell pressure at that point from these guys. But it gives MicroStrategy a little bit of a chance to engineer their customer base for these bonds to try to figure out what the right mix is of getting the convertible ARB guys in because you want them to provide the liquidity in your stock, right? You want some people trading the stock.
Yeah.
Versus a long only position where you don't have that short pressure entering the market against your equity from that initial delta hedge and some of the other delta hedging as the price climbs. So it's going to be interesting because that benefit does exist there. And these are bonds that provide significant upside to these insurance agencies, where even if it's a very small portion of their overall holdings, right? When you're talking about pools of capital that are in the trillions of dollars, a small percentage is still a significant amount of money, right? So I'm going to be curious to see as they do new offerings, when these 13Fs start rolling out and we start seeing who's holding these bonds, it's going to be curious to see how that mix is changing here over time, to see if it looks like they're focusing on changing that mix. Because keep in mind, these are all private placement, right? These aren't bonds that are going to the open market and people are bidding, right? These are direct sales to institutions and organizations. So it's going to be interesting to see how that evolves, who they're talking to.
It's I'm going to comment on a comment here. Convertible bonds really don't jive with the risk appetite of an insurance company per se. And it's like, okay, a convertible bond has less risk than equity. All insurance companies hold equity on their balance sheet. How much equity they hold on their balance sheet? I don't know, maybe 10 to 20%. It's a very small portion, right, relative to their entire portfolio. Now, I'll tell you what's happening in the industry, right? Inflation expectations. Why have insurance prices gone up so much? Because inflation on claims has been going up greater than CPI, and pricing is readjusting to match the cost of claims into the future. All this is systemic. The insurance companies themselves have missed. They've all missed on inflation, all of them. And this is like a compounding impact of like what's happened as well. Like, there's a really soft market period where all of these tech companies with like digital insurance offerings came into the scene. And like between 2010 and 2020, we saw an explosion of like Progressive and Geico and Allstate and all these companies like adopting, we called it InsurTech. So they're adopting InsurTech, and they were just underpricing stuff to get business in the door. And, you're like making these smaller insurance companies completely irrelevant. And the market was really soft, like largely wasn't any large catastrophes. We were in a low inflationary environment, low interest rate environment. And all of a sudden, like, boom, you've got 17, 18 1920, like you've got huge catastrophes that are happening. You got wildfires happening all over the place, hailstorms all over the Midwest, tornadoes, big hurricanes hitting Florida and Texas. And you've got these huge, enormous events. And you've got all of these companies realizing that their pricing is completely underwater, and their pricing is underwater. And in an admitted marketplace, you have to file your ratings with a state regulator. And filing a rating with a state regulator takes time. It takes like 3, 6, 12 months. Well, guess what? Like if you make a filing and it takes 12 months for your filing to get approved and inflation's 6%, that filing you made 12 months ago is already underwater. And like that's what's happening systemically in the industry. And if the inflation expectations change quickly again, and the admitted marketplace doesn't allow them to move as quickly with the market, yet the reinsurance market has no regulation, and the reinsurance market moves very quickly. Prices risk very quickly. So the reinsurance costs are rising, and these insurance companies can't make up for it in the price of risk quick enough. And then the insurance company business model starts to break unless you have assets that are a good hedge. So the concept of like doesn't fit the business model per se, I would just push back on that super hard and say why. And like insurance companies are going to start thinking about these things differently. Like the industry is evolving. If it doesn't evolve, insurance companies are going to die. And I've already seen it happen. Insurance companies are going out of business, particularly small ones that are old or have been around for a really long time, are getting eaten alive because they can't compete. They're not large enough. They can't move quick enough. They don't have digital infrastructure, all these other things. So like you need to modernize your balance sheet to adapt to the market environments. And that's like, I'm sounding the alarm bells because the industry itself needs to adapt. And this is a way to consider adapting into the new environment. So that's the way I see things.
Yeah, it's an interesting use case, right? I mean, this wrapper of corporate debt provides a lot more uses that's essentially backed by Bitcoin than we're going to see otherwise, just because of the treatment that Bitcoin gets. So, I mean, MicroStrategy being the first real player at major scale here makes a difference for that. And I think QQQ inclusion probably also brings some benefits that they're going to see here over the next couple of years as well, just from the credit perspective. So,
yeah, and if they start like, look, these bonds are unrated.
Yep.
The bonds are unrated. Well, guess what? They can go get a credit rating on them. And if they have QQQ inclusion and their assets on the balance sheet, let's just say they adopt FASB fair value accounting. They post some pretty big net income numbers, and all of a sudden people are starting to like accept this asset. Maybe we have a strategic Bitcoin reserve at that point. All of a sudden, these rating agencies are going to start looking very differently at these products. That maybe they've outperformed every other product in the market, for the last 24 months. And you've got them included in QQQ and potentially S&P 500. And all of a sudden you go from an unrated bond where you get 55% credit on your balance sheet for holding this unrated bond to, okay, now you've got a B+ rated bond. And now you get 70% credit for holding it on your balance sheet, and you get Bitcoin exposure. And you open a completely different pool of capital that's like, oh, I can't take on any bonds on my balance sheet unless they're B+ rated or better. And that's a completely different pool of capital, right? Like we've got this unrated, it's like the wild, wild west, right? Who's buying unrated bonds?
Like, well, you wonder if over time, right? So I would guess S&P 500 is a really big one for the ratings here, but eventually you could conceive of a time where they become much more targeted with how they're releasing these bonds, and they might go get certain ones rated with the intent of issuing those bonds directly to these types of customers, right? That need a rated bond for these reasons. And so it kind of changes the tactics that they can deploy in this type of a strategy once they feel confident that they can go out there and get a much higher credit rating than they probably would today. So it's going to be a fascinating evolution here as time goes on.
Yeah, the unrated bond side of things is like, who's buying unrated bonds? It's somebody that's flexible with capital. It's somebody that doesn't have like a huge board that has to go tell them, I got to go tell a board like, oh, dude, I just bought $50 million of these unrated bonds. You're like, they're going to tell you, what the fuck are you doing? Like who, not many people have the clearance to go buy $50 million of unrated bonds. Like that pool of capital is probably pretty niche. And as this product expands and becomes more like widely adopted or I guess appreciated, if Moody's starts rating this stuff, S&P starts rating this stuff, it could continue to pile on, and we see these the capital pools emerge, and it's like leveling up in a video game, right? Like you level up in Mario or something. It's like, okay, we're going to the new level. All right, the new boss is bigger. It's like, well, the new pool of capital is bigger. You've got a new group of people that you can offer these types of products to, and they may want different things too. Like they may be more interested in like a straight debt product where like a coupon payment is really important, and maybe it's a 2 or 3% coupon, but the conversion price is like 20%. And the ATM that they're using is enough income to pay off the coupon, or whatever it might be. And we start to see the structure, like the credit rating, the structure, the pricing, and then all of these different products. Like we're tip of the iceberg, right? Like that's another thing. Is one reason I'm so freaking bullish about this thing. It's like we're product number one. What about the future capital plan where they're offering like preferred stock and warrants and like different, like 4 different types of convertible bonds and different structures and shapes and sizes and all of these other things? That's cool.
And it goes along with what they keep saying, right? They're securitizing Bitcoin, right? And there's a lot of different ways to approach securitizing Bitcoin with these product offerings that's going to cater to all the different audiences that are out there. And now that they're doing it at significant scale, they've got that chance now to start segmenting the offerings that they're putting out there. First, I think it was just about we need to get Bitcoin as fast as we can. And I think that's still the goal, but they can change the way that they deploy the strategy in order to achieve that goal. So it puts them in a unique spot, particularly over the next probably 3 to 5 years. And once you get the air coverage from a country like the United States, if Trump follows up on everything that he's saying here, look out, because there's going to be a lot of demand for these types of products that I don't think a lot of people are anticipating.
Right. Completely. And we're going to see like MicroStrategy isn't going to be the only game in town here either, which I think is good. I think that's a really good thing for the market, right? Like MicroStrategy is like 99% Bitcoin, 1% software tech. And then you've got like mining, which is like the mining industries that might be like 50% Bitcoin, 50% mining. And then you've got like Semler, which is maybe like 60% healthcare, 40% Bitcoin. And then you're going to have other companies like, I don't know, like a clothing company, or let's just say like Nike comes out. Maybe it's like 10% Bitcoin and 90% shoes and like clothes and stuff.
Yep.
And we could see, I could see a world where those are then bundled. And now that's a bundled product that's being sold to a different buyer, right? It's like a different pool of capital. And all of this is like capital that's flowing, that's all trying to get this exposure to meet different things. So, and honestly, the Fed meeting today, I went into this Fed meeting and I was just like, what's going to happen here? Right. So like, I was thinking, okay, so Fed comes out, they're dovish, risk on assets, like risk assets, Bitcoin goes up. Okay, cool. I'm like, that's an easy outcome. And then I'm like, wait a minute. Okay. So what if they come out and they say, and they're super hawkish? And I was thought, well, if they're super hawkish, that means inflation's high. And if inflation's high, what's the inflation hedge? It's Bitcoin, right? And then I was like, okay, well, fuck. Like, how does it, like, how does this work? Like, it goes, but it's both ways. It's like it's a risk on asset, but it's also a risk off asset. I don't think the entire market really views it as a risk off asset yet. But if we get into a situation where inflation expectations continue to like, they run away or debasement runs away, like all of a sudden people are like we just went through a really hard inflationary period, a period that people have never experienced in many people's lives, including my life. Like I've never experienced an inflation period like that before. Now, if people and people are in pain, people are in pain. And if people start to experience and feel that again, they're going to freak out.
Yep.
They're going to totally freak out. And that is, there's a greater than 0% chance like that happens. So like, man, it's just a weird time thinking about like monetary policy and all this stuff too.
Yeah. Inflation, right? You never know quite what to make of it, right? Because there's what they say and what they mean during these meetings, and they're very calculated in the messaging that they put out. And it seems like people were almost getting too focused on how fast rates were going to come down. And it's almost like they needed to use this meeting to temper those expectations and kind of reset expectations again to the market to give themselves that flexibility to pivot if they needed to. That was kind of how I read into his comments today. But, ultimately we'll see what happens. But with the other companies, two pieces of news, right? So Semler got an options market now. So
that was today or yesterday. Yeah.
Yep. So I think we're getting close now to seeing whether or not they're going to go the full MicroStrategy playbook, right? That was kind of the last piece that they really needed to get into the convertible debt market. So we'll see if they start issuing convertible debt, right? That'll show what type of play Semler is going to be. The other news that came out is Metaplanet's listing in the US. So that's going to be an interesting one to watch too. Looks like
congrats, Dylan. Yeah, awesome.
Yeah. So it sounds like it's going to be on the OTC desks at first, but we'll see what happens there. But I thought that was pretty interesting that they were doing a listing here.
That's so funny. When I looked to buy to buy Metaplanet when they announced, and I was like, how the fuck do I buy this stuff? Like I looked at I've got like 6 different brokerage accounts, and I looked in like all of them, and I was like, well, can I get it here? I'm like typing in numbers, instead of like stock tickers. Because I think they're like 00162
3350. Yeah.
Yeah. There you go. And I was just like, how do I even do this? But if they come to the US market and it's like, you could buy it on any brokerage account. I mean, all of a sudden, like we're talking again about pools of capital, right? Like this is like a whole new pool of capital that could easily buy your equity. This is why iBit was such a big deal. Like I could buy it in my brokerage account where all my money's sitting in the same place. And wow, that's super bullish for them. I'm excited for them.
Well, it's going to be interesting to see how the US markets interpret them versus how the Japanese markets interpret them, right? Like if you look at their chart, they've got one of the most insane charts of all time.
Oh yeah.
I mean, just the vertical trajectory that they're on is incredible. So I'm going to be curious to see how the US markets digest their equity here, in comparison to how they're looking at a MicroStrategy. So, but it's cool to see, more companies showing up, running the playbook, or at least indicating they're going to run the playbook. But we do forget a lot that really, outside of the miners, right? But I look at the miners in kind of a category of their own for this type of a strategy. But in terms of like the companies that have a non-core Bitcoin business that are running this Bitcoin leverage playbook, MicroStrategy is really the only one that's done the full playbook so far. Semler looks like they might be next, and now we get to watch to see, you get a lot of companies that make announcements that I think are more marketing announcements, like, hey, look at us too, right? Mm-hmm. You're going to get a lot of that probably here over the next 6 months because they've seen how the equity markets reward their stock just for saying the intention of doing this. Yeah. So you're going to have to filter those out through their actions and see which ones actually follow through on running that playbook. But, you're starting to see that evolution show up where MicroStrategy is not going to be the only game in town. And it's going to be curious to see what type of support those other companies are going to get relative to what MicroStrategy's done so far. Because MicroStrategy is the only one that has the scale at this stage.
Yeah. The pure scale.
So big capital is going to stay there for now, right? Until some of these other ones achieve scale. But it'll be curious to watch that path as more enter.
It was interesting. There was that one miner that issued the convertible bond and they did a stock buyback.
Yeah.
I thought that was, and then everybody's like, oh, they're buying Bitcoin. And it's like, no, they're not.
Was that Clean Spark? I don't remember.
I think it was Clean Spark. It was like $500 million was like, and then I looked at the prospectus and it's like, we're buying our stock back. Like, wait, that seems weird.
Yeah. I mean, you got all different approaches, right? The
Yeah.
miners are such capital intensive businesses, and their economics will get good if Bitcoin goes on a serious tear, right? Like, I don't doubt that there's going to be performance in the miners. I'm not someone who hates on the miners. I invest in some of the miners, but it's a tough business when you're looking at this type of a model, because the difference with a MicroStrategy is, you know, that they do the convertible bond, they're buying Bitcoin. You've got an asset that goes to the balance sheet that has the ability to perform for you. They use the ATM, it's going to Bitcoin, right? You
Yeah.
got an asset that goes onto the balance sheet. The miners have a really capital intensive business where they've got to replace the miners, the ASICs, all the time, right? Because it's a constant game of jockeying for the highest efficiency for your company versus the other miners. And so there's that cycle that they have to work through. So they got to fund that somehow, right? Whereas MicroStrategy running a software program doesn't have the same thing, right? The operations and the cash flow from the operations will support the BI business. So you don't have to worry about that. So they're very different types of plays that we see in this space. But it's good to see a lot more of them coming out, because I think we're going to see a lot of different models, right? MicroStrategy is just one model so far. And some of these other companies might find a different way that they think is going to be most accretive for them. And it's going to be interesting to see how those tend to take shape.
Absolutely. So we've really just kind of rambled here. You got any?
Oh, hey, I'm paying attention.
He's locked in. Meanwhile, he's like, what covered call strategy I'm going to run in the.
He's
back
got
door."
everyone out there in a trance looking at the eyes on that thing. You know,
You did reduce the brightness on him, though.
Exactly.
So people should be
Exactly.
happy. People, you definitely reduced the brightness.
yeah.
Look directly into the eyes.
I will give you one interesting thing that we should just note here. As I was going through the 10Q earlier on in the call and looking, and it does look, because all the questions are going to start coming up going into the new year about, tax liabilities and that kind of stuff. They do state in there that corporate alternative minimum tax really wouldn't kick in for them until 2026. So it looks like we've got a year where we're going to get more clarity on what that means going forward. But just something to note, that it's not something that's going to spring on us, Q1 of 2025. It looks like the first time that would kick in would be 2026, and it would spread out over a series of years through, I think, 2028 or 2029. I can't remember which, but so just something to note that, that's always going to be hanging out there. But once the accounting rules are fully changed, I think MicroStrategy will be able to go back and figure out what that means. I'm not going to try to interpret it. I've done my own calculations on what I think it means, but I'm not a CPA, so I'm not going to share those publicly here. But
yeah, there's so many moving pieces with that, right? I mean, you got a new political regime that is very pro assets and very anti taxing unrealized gains. So I wouldn't be surprised if we see that rolled back, just period. Because that would seems like an insane precedent to set to make somebody sell equities or any asset in that matter to pay a tax on an unrealized gain, which is pretty crazy. And there's also been some precedent with insurance companies, so that they carry large assets to meet future liabilities. And I think corporate alternative minimum tax, the guidance from the IRS has been that doesn't apply on unrealized gains. So any way this goes, that's something to kick that can down the road. They're also carrying like a $1.5 billion tax deferred asset because of all of the gain that they held on their balance sheet, which I think is even larger now. So that's just something to keep in mind. Somebody asked about if we went over any bears yet, and I haven't. But I can. I think maybe we do a little bear chatter. And Soleil, you could jump in here because I think you posted one of these, so we could talk about them. And you might not be able. God, I tried to zoom in on this. Maybe I could zoom in. Oh shit, I can't do it that way. Well, I can't get any bigger. But anyway, this guy, Alex K. There's so much misinformation out there about MSTR. It isn't a synthetic call on Bitcoin, nor is it even a leveraged way of buying Bitcoin. It's a poorly structured, tax inefficient fund that trades at 140% premium to NAV, and then goes through this whole thread. It's just like, oh my God, these takes are so poor, right? Like a fund, like this isn't a closed-end fund. This is somebody like doesn't understand Bitcoin, right? I mean, So, like, you see this one? We got a koala here.
Yeah. Yeah, that's appropriate.
It's appropriate. We got a koala.
I've noticed that koalas have really taken over.
Yeah,
Right.
yeah.
Like
Yeah.
you're waiting for the big ones to come out, like when someone really calls out a black bear that showed up, right? Or a grizzly that showed up. But we've just got all these cute bears out there so far. So I'm waiting for the real ones to show up.
Yeah, nobody's really come out and been like, I'm short, you know, $200 million. But I think also, yeah, shout out Angry Buddha. He's still here. Yes, thank you. I think the market realized if you call it out, you're gonna get attacked. And like Carousel or that capital team in like January or February that, you know, they went under because they longed Bitcoin and shorted MicroStrategy. So we've got two out there that they came out publicly and said they did this. And Citron, like, we don't know where they sit somewhere, like they might still be out there. But the everybody comes in pretty heavy. Everybody comes in pretty heavy if you're really public about your short position. Did you send another one, Ben, in the chat?
Yeah. Yep.
Okay, I'll add that one up there. We'll go through that one fourth. This one, this guy, Flo Sidon. MSTR was such a sell the news. Oh my God. This is,
Yeah, that's the one.
yeah. Thanks.
Sell
Shout
the
out
news.
What the Pat. This guy also was talking shit about MicroStrategy. You know, back when it was priced at I don't know, split adjusted like $20 a share. So how about them apples? You know, how about some returns? So you know, it sucks when you're that wrong and you still have to talk shit about it. It's really incredible. I think BitPain called that one out. It was like, dude, you've been talking shit about this company for 2,000% gain.
People's ability to carry a position long term, I almost am impressed by it. I mean,
Oh, yeah.
some of these, I at least appreciate the Bears, even if they're not going to put skin in the game. But if you're willing, you know, like Peter Schiff level, where you're just going to ride this thing to infinity as a bear, like you got to respect at least that. At least they don't change their position.
Yeah, absolutely. My next one was Peter Schiff. So.
There you go. The greatest self-promoter of all time with
Yeah.
0 returns on anything he's ever done. Yep.
Oh my God, Peter Schiff, man. It's so funny because his family owns Bitcoin. He's like, he talks about his wife, you know, owning Bitcoin, his kids. Yeah. He owns Bitcoin. You know, this guy has got a huge stack of Bitcoin and he's just like, somebody's got to play the bear in this thing. You know, like I don't know. I want to acquire more. Who knows what Peter Schiff is actually thinking?
He's a brilliant marketer, right? You got to give him that because
He is.
the ability to just play the heel all the way, right? All the way through.
And he's strong. Like he's like a
he's-
strong
he's
character.
good.
Like
I like it. I
Yeah.
like it. I mean, when he had his debate with Jack Ballers,
yeah.
and Jack was asking him, you know, like, well, how much of your portfolio is gold? And he's like, you know, 5%. And Jack's like, I'm 100% Bitcoin. So only one of us believes in what we're talking about. The other has an insurance policy, right?
Yeah.
Like you don't even believe in gold that much. So, but you got to love his ability to stay in the media, right? We talk about him all the time. He makes it onto all the talk shows. He's brilliant at that. Like I'd like him to market a product for me if I had one for him. Like he's good.
Yeah, absolutely. What Peter Schiff says here, it's wrong for Saylor to compare his leverage buying of Bitcoin to investors borrowing money to purchase Manhattan real estate. So this is that like quick clip that Saylor came out on Ponzi schemes. Real estate generates rents, which can be used to service and repay debt. Bitcoin doesn't generate any income to make interest or principal payments. And it's just like, oh, dude, like, oh my God. And somebody responded here. The rents. Okay. So Bitcoin has no expenses and no maintenance required, unlike Manhattan real estate. And then Schiff says the rents exceed those expenses. And I think my favorite response here is from Antonio. You hope the rents do, which is so true. Right? Like
Only until the roof has to get replaced. Yeah.
Right. And that's what I posted, right? Like the Bitcoin makes up for the lack of rents with its lack of maintenance, taxes, vacancy costs, decay, insurance, etc. And just because it's not rented today doesn't mean it won't be rented in the future, right? It's like it is collateral. So Peter Schiff is like the biggest koala bear out there. And it's so funny. He's so loud. And And you brought up one more, Ben, right? Bear sighting, Joseph Carlson. You want to take this one?
Yeah, I can't really read it on your screen on
That's
mine
so
here.
small, dude. That's so small. How do I do this? I don't know. I'm just an insurance guy, you know. I don't know.
It doesn't matter. It made the
Yeah.
point.
Whatever.
I just like that
here we
people
go.
are taking that clip and putting it down.
Oh,
there,
yeah.
and you just see a little cutie koala bear here. Like, it's got to be so frustrating for some of these people when they're posting these things that they think are gotcha statements.
Oh yeah,
Like,
Samantha,
oh, that's
Samantha
cute.
Leduc. Samantha
Yeah,
Leduc.
that was a
She
good
had
one.
one too, and I was just like, "Oh my god, are you really talking? Like, you have no idea what you're saying right now." And I was just like, "You're so cute. You're just a little koala bear. Like, you don't know what you're talking about."
You know, you chimed in on her and she blocked me.
Yeah, I know. She didn't block me. You
Yeah,
you sent that in our chat, and I was like, "Oh my gosh."
I think I just put a laughing emoji under your post and she blocked me.
Yeah. Oh man. Yeah, so what we got here on Joseph, all we've done is replace the most extreme speculator of Kathy Wood in 2021 with another extreme speculator in Michael Saylor in 2024. In both cases, the only bull case on the way up was you don't understand, cope, you're just missing out on the future. Oh Jesus, this is huge. Oh my God. Be careful who you choose as your heroes. Saylor does not care about you. And the fact he's compared the cash producing properties of Manhattan real estate to crypto shows how dishonest his arguments are. Oh man, you can't make this stuff up.
Do people
Shout out
understand that
Dimitri.
with real estate, that these guys aren't getting their money out of the rents, right? They're really getting the money when they refinance them based on the appreciation of value of it, right? Like that's what those guys are doing. Like,
Yeah.
they're
The
happy to
rent is
break
just
even
like
on the rent,
survive.
right?
Yeah. Cap rate doesn't mean shit. Like you get like couple $100 on like a like cool. You're not retiring on a 2% cap rate. Like,
yeah, you got to keep it floating until you can refinance and pull money out of it. Right?
Yeah, and just hope the real estate Ponzi keeps keeping on.
Yeah,
right.
well,
Yeah, and there's not another alternative asset that you might be interested in holding that doesn't have all these shitty properties of holding real estate. Yeah, interesting.
Didn't Saylor say something about that in one of his interviews? And he's like, "Well, you know, it's been going on for 300 years, so."
yeah. That's what he said. He's like, "Oh, you know, we've been doing this for 350 years." Yeah. It's like, yeah, this is the thing.
It's been a good investment every year for 350 years, so I guess it keeps going up. You know, we'll see.
It's crazy. It's just so it's totally nuts thinking about like homes and stuff too, like your even personal homes, and like thinking about the utility of it. Like it's when I think about like this house is like I like it, it's got utility, but like I don't really care if I like make money on it. That's not how I view it. It's like a roof over my head and safety, and that's how I view it.
I do think some people probably look at them as investments because it's kind of like a forced savings account.
Yeah.
Right? So if you buy a
illiquid,
yeah, it's a liquid, so it kind of forces you into that, and you can eventually tap that value later. So for a lot of people, if you're not, you know, good at managing money or something, right, it kind of forces you indirectly into saving, but it means you got to either sell your house or lever yourself up to access that value. But all I know is I pay a ton of money fixing things on houses all the time. So, you know, I don't.
My house is 105 years old. It's like it's a Frankenstein. I mean, it's just like, it's very clear, like 30 people have lived in this thing, and like, it's all like a bunch of weird shit has been done like all over the place.
Yep.
And it's just like the biggest headaches everywhere. And it's just, it's a lot. It's not as cool as like everybody made it seem to be, you know. The other part I don't get is like how these people that like have all their wealth tied up in real estate, like how do you retire? Like all these boomers have like their wealth tied up in real estate in the houses that they own. And they're like, well, all my equity's in my house.
Yeah.
Okay, well, you got a reverse mortgage and you stay there until you die. Like, what other option do you have? You can downgrade and like make your it's just a strange thinking of like past generations thinking about houses being like the way that you save for retirement or like your future.
Yeah, because it worked for our parents. You know,
yeah, it did.
That's all you had to do was just buy a house and sit and do nothing. Just don't miss a payment.
Yeah, you buy a house for a packet of raspberries and, just like $2,000 and like, yeah, you're all good back in the 70s or whatever.
But it's
the
weird
prob-
that people don't even like it's the only thing that people assume when you buy it new, and then it gets materially worse by every objective standard and gets more valuable. That doesn't make any friggin' sense.
It's like it's rotting.
Right?
The wood is
Yeah.
literally rotting.
Don't
Yeah,
tell
the
the
wood
real
is
estate
rotting.
guy's wife.
Yeah, all of the construction materials are getting better all the time, and it's like, yeah, I mean, as soon as you sell it and someone lives in it, like everybody understands when you drive a car off the lot and you're the second owner, you don't know what the first owner did to that did to that thing.
You find out
And-
if they thought they were a handyman or not, though.
Yeah.
Oh,
Yeah.
exactly.
Handyman is like not the word I want to
Yeah, you
hear.
start
Like,
going
that's
through a
just
house
like-
you just bought, and you're like, I think you might have tried something you weren't
Dude.
qualified to do here. Now I got to fix
Yeah.
it. You're like, great.
the owners of our house previously were definitely handy AF. It was
yeah.
not good.
Yeah.
Yeah.
Got a
It's just,
bunch of stuff not up to code and shit. And it's like, God.
it does tell you when you watch people go through that cycle, though, of, all my value is going to be in my house and this is what I'm going to live at the end of my life. It almost becomes sad, right? Because the only way you can really do that is to sell your house, and then you've got to downsize your life,
Yeah.
right? And you've got to go into this conservation mode for the rest of your life. That's not a fun way to live in retirement, right? So
Yeah. It's honest. Yeah. It's honestly pretty sad.
Yeah.
Like thinking about that design, and housing is just too expensive, just period. And it needs to be more affordable for like the humanity to kind of continue doing what they're doing.
Yeah,
right?
exactly.
Like,
It's bullish for our kids and grandkids. I mean, it's going to be more affordable for them.
yeah.
The retirees that are banking on that being their retirement plan, okay, you're going to have to figure something else out. But at least the next generations will not have to, I don't know, save for 25 years before they can afford a house.
Yeah.
Yep. We've probably
Anyway.
left our,
Yeah, we're-
our realm of focus here.
Yeah,
for
we're
people.
out, dude.
People are
We're
going to
out.
come at us going, you guys are doing exactly what other people do to Bitcoin, right? You're talking about the real estate guys. We're not real estate guys. So
No.
I'll do the critique for us.
Yeah. We can close it off. Well, that's all we've got for today. This was a fun episode. I mean, we ended up talking for a little bit longer than I thought we would, which is great. And I mean, there are so many things to be bullish about on the horizon. I mean, the cost of capital was just dropped today. Yes, the market puked, but like the cost of capital is going to be cheaper moving into the future and moving forward. And even into 2025, we do expect at least 2 more reductions in interest rates for the cost of capital to be reduced even further, which means cheaper borrowing, better borrowing terms, more Bitcoin on balance sheet for MicroStrategy. And I think we're going higher. So I'm incredibly bullish. Ben, Soleil, final thoughts.
Yeah, same thing, right? I think we're transitioning here. I think people are getting sick of the ATM, and luckily for them, I think we're coming to the end of this phase of an ATM, and we're going to shift over back to the convertible bonds, which people get much more excited about. So Q1 2025, I'm expecting a lot of movement here. So we'll see what happens. Obviously, we don't know, but to your point, the cost of capital goes down. That likely means more 0% bonds that they're going to be able to get out there, which means that they're just going to continuously keep pulling off the cash flow needs from the core business. It's just going to put them in a really, really strong position going into 2025. So I'm excited to see what happens in the first couple of weeks of the new year.
Bingo.
Yeah, and for me, I'll take the my final thoughts back to your initial thoughts when you're talking about MicroStrategy being a long-term hold for you. Like, it means long, and I guess if I transition from irresponsibly long to responsibly long, the shortest, the biggest bear move I can imagine myself taking over the next 5 or 10 years would be like eliminating all margin and leverage, so no margin, no long calls or something, and just going straight to straight shares. And then maybe maybe adding one more stock to my portfolio, like up to 2 from 1. Maybe I'll diversify into 2 stocks.
You'll pick another Bitcoin treasury company to divert your portfolio.
Exactly. So, you can come in and when I post about it, you can just, hashtag MSTR bear sighting, when I
Yeah.
when I add one more stock to my
I added
portfolio.
another stock to my portfolio.
Yeah.
That's awesome. Well, thanks, Soleil. I appreciate it. Thanks for the time, everybody. Final count. I got 19,000 people viewing this. So thank you for being here, and appreciate the time. We'll keep running. Have a great holiday period. We will not be back until the second week in January, unless something crazy happens, and it's going to be off cycle. It's not going to be on a Wednesday. I can't promise that's going to happen either. Like, we all need a break. I kind of want to like go read a book and maybe like relax a little bit. So I might do something like that in the future. I've got plenty of books to read. Maybe I shouldn't read any of those. Those are like the hard ones. We're gonna think. But anyway, thank you, everybody, and we'll be back in 2025. Cheers.
Happy holidays, everyone.
Thanks, Jeff.